Well, good afternoon, everyone. Coming up to 5 o'clock here. Very wet afternoon here in West London. I hope you had a great Christmas. And as you can see, nothing much has changed since I did a video last week. Markets selling off today. S&P holding at that 3800 level for now. But all the trends on VectorVest from short term to long term are down. However, the buy-sell ratio getting down towards 0.40, and it's getting down into a mega oversold area where some form of a bounce becomes probable. It's probably good. It's got a little bit more to go. The gurus at VectorVest in the US tell me that when the buy-sell ratio gets down to about 0.25, that's a good place to go bottom fishing. So we're not quite there yet. So, but getting close. If I have a look at the VectorVest composite of the US market, and I've populated the DEW market timing system, which is what I follow for my swing trades. And as you can see, as of a day or two ago, from the 15th of December, in fact, that's saying that the trend is down. The swings this year, as we all know to our cost, the swings up have been short of a short duration. This one in June wasn't bad. This one from the end of October, there was some money to be made in that, certainly. The buy-sell ratio getting down into this mega oversold area where a bounce was probable, but as I say, it's probably still got a way to go. And the only reality, folks, is that the trend is down. I've been trying to make some money on the short side, and as long as I'm patient and I wait for the trades, I do fine. So I just want to go to my dear old friend now, the S&P 500, and try and point out some trades over the last day or two. This is the SPX, folks. As you know, in the United Kingdom, we can actually take bets on the index itself. It's through a process called spread betting. And apart from the legalese of the spread bet, it's essentially a position on the futures market. So this is the SPX cash on VectorVest. And you know, there's been some great trades in this, and I've got very used to these markets. This market, in fact, following through like this. It's not normally like that, I assure you, where you get these huge brutes of moves that just keep going. But the last day or two, this was last week before Christmas, as you can see, this is what I call a surprise attack. You get two up days, and then the second up day closes in the top 80% of the range. And then the next day, when it breaks the low, that's a sell signal. So that's called a surprise attack. The sentiment has just changed overnight, and managed to get most of that move on the downside. So what's it doing today? Well, market went into a what I refer to as a double inside pattern. And these highs of the inside bars and today's high are in fact an exact 62% retracement of the last little swing, which I'm going to show you in a second. Today, the darn thing went up and ran the highs of the last 2 days, and would definitely, it only ran them by 2 points, but definitely would have pulled an awful lot of people in, and then in fact very quickly spat them out on the downside. If I blow this up now to a 15-minute chart, and I think I've already got that if I can find it. No, that's where I was. Yeah, this is the 15-minute chart. I thoroughly enjoyed trading the 15-minute chart. I traded a 5-minute chart for a long, long time. I traded an hourly chart for a long, long time, but a friend of mine was trading on a 15-minute chart, and I spent a day with him. And he said it's a much more relaxed way to be. Stop losses are much smaller than on the hourly chart, but the action is not quite as fast and furious as it would be on a 5-minute chart. So if we have a look at this now, blow this up and now, there's 5 days worth of data. This is that last little range that I showed you a second ago on the daily chart. Now, if we actually put on a fib here from that high down to that low, we can see that it's been short, the hell shorted out of it at that 62% retracement. Once, twice, 3 times, 4 times, 5 times, 6 times. It went right up at the open to the level and then was hit hard up there. And I was expecting that. As you know, the trends on VectorVest couldn't be further bearish than that. Let's get the lines off. As those of you that know me will know that I get confused when there's too much muck on the chart. And I get confused easily in markets. I worked for this chap once upon a time. He was the chairman of Anglo-American in South Africa. And he told me after a few gins at lunchtime that when he wasn't confused, he automatically assumed he hadn't been told the full story. But that's another story. So today, that was the opening bar today, and I went right up to the level, and it was hit hard at the level. I was looking for any reason to go short. That's the truth. I know you shouldn't in this line of work have an expectation. So I shorted a little bit below that low of that 15-minute bar, and I shorted a little bit more below the low of the opening 15-minute bar. And I'm currently still short of the market on both those positions, but my stop loss is at the low of the opening bar on both positions. So I've locked in a handful of points on the first bit and nothing as yet on the second bit. This level of 3800 is incredibly important. We go to the back to the daily chart. And as you can see, if it were to break that low, which I think is holding the market now, then the next spot on the downside would be this low. But what's more likely would be a run to a fib extension of that, which would be to here. And that would take us down to a level of 3716. That would be the Fibonacci expansion of the last pullback. I doubt if it'll do that, even under the most positive circumstances for the bearish position, that it'll do that in one day. But I'm going to try. I think that it can get to the 78 of that or the old low relatively easily and quickly. So do my best to keep my sweaty little paws off that. Dr. DeLeo asked me the other day to write my 7 cardinal sins of trading, and the first one that I gave him was, in fact, adding to losers. We were talking about the stock market. Adding to losers is the worst sin that you could ever make. But the second sin is snapping at winners. And when you're right, you've got to ride that position, because that can, in fact, make up for all your little losses quite quickly. So holding that position at the moment, and if I go into my other little chart now, I'm getting confused here. It's moving down nicely. Let's look for some targets here if I can. There's the low. Oh, that was the trade before Christmas. That was the surprise attack. I shorted it here and it went right down. I didn't trade any of this. Thank God for that, because I would have lost money in here. But today I was looking for a trade, because that double inside bar normally breaks quite aggressively. And I really like the look of a great deal of money shorting it up around that level. Holiday markets are difficult. The liquidity can, in fact, get very, very slack. And that 25-point profit that I've got at the moment can be vaporized instantaneously, but I doubt if it'll move that fast that I'll lose money on the position. So let's see how she goes. So what I've just hopefully entertained you with is how I make a living, folks. I haven't got, I'm still holding the position long on the GDX, and I'm looking very carefully at getting back into XLE, but I'm not going to do anything. I've got another position running as well, but I'm not going to do anything more until the new year now. So I'm traveling this weekend to Tampa. I'm going to chill in Tampa for a few days, and then I'll be speaking on swing trading at the VectorVest 2-day talk in Tampa next Friday and Saturday. So those of you that are coming to Tampa, look forward to seeing you. Thanks very much indeed. Let's see how this goes. Bye-bye.